And right now we see stocks highly elevated. We see corporate debt at all-time highs. We see consumer debt at all-time highs. We see interest rates near all-time lows. So if you just play the tape out 5 years, or if you play the tape out 10 years, this thing is a disaster.
Right.
Because you have all of these high loans, high debt loads that will have to be serviced. And they're not going away just because rates go up. They're going to also go up as well. So we're faced with some really big challenges here financially. And I think the stock market, as we move into this final quarter of 2016, has me alarmed.
Welcome back to Rethinking the Dollar. Today I'm excited to have a former guest here on RTD, Mr. Jerry Robinson of Follow the Money Daily. Jerry's the creator of a popular podcast, Follow the Money Weekly, as well as a best-selling author of the book, Bankruptcy of Our Nation, Your Financial Survival Guide. Today, Jerry's going to join us to share his thoughts on the economy, geopolitical events, as well as his opinions on his current election cycle. So, Jerry, welcome back to Rethinking the Dollar.
It's great to be here. Thank you so much, Mike.
Well, I appreciate you taking time to sit down with me. Definitely, there's a lot of things to cover since we last spoke. I think it was of last year, summer of last year. So I'm interested in getting your take on what's going on. And ideally, I'd like to start off with some questions. But the first question is, what's of concern to Jerry Robinson right now? We have Russia, Syria fiasco. We have this presidential election. It's turned out to be a real, entertaining some debates. So what's of concern to Jerry Robinson in 2016?
I think among the most biggest concerns of mine right now as we head into the final quarter of 2016 is, I would say, certainly I would rank Russia and what's happening in Syria way up there. The headlines coming out from this debacle and some of the things that I've just been hearing from my sources are just bizarre. We haven't really been here with this kind of fiasco with Russia in many years. I mean, we would have to go back to the Cold War. And even then, we wouldn't find some precedent for some of the things that we're seeing now. So these are very dangerous times between the U.S. and Russia. Of course, it's all centering around Syria. Syria is a country that the neocons they've long wanted to take over, like they took over Iraq.
Mm-hmm.
And as they also took down Libya. So they're wanting to take over Syria, and really what they want to do is they want to get rid of Assad because Assad provides a safe haven for Iran, and of course that's not good for the Sunnis. So the Sunnis in the region, such as Saudi Arabia, Qatar, and all of these countries, are vehemently trying to stop any kind of hegemony or hegemonic efforts by Iran to exert itself in that region. And unfortunately, the U.S. has got itself caught in another quagmire. This is a Muslim civil war that just continues to rage on. And we've chosen the Sunnis as the side we're going to be on. And it's just a total shame that so many people are paying the price. Our weapons, of course, are being dropped on Yemen. Yemen is one of those silent countries that's not getting hardly any media attention. And yet there are civilians dying there thanks to U.S. bombs dropped by Saudi aircraft that we provided to them. So it's just a total disaster in the Middle East. The other concerns I have, aside from the human toll that's going on in the Middle East, more financially driven, would be the markets here. I mean, the United States stock market, the S&P 500, which, many people who have money in an IRA or a 401k, that's usually what they need to be looking at. They need to know it's kind of like a thermometer. The S&P 500 kind of tells you what are U.S. stocks doing, what's the mood, what's the tone. And right now we see stocks highly elevated. We see corporate debt at all-time highs. We see consumer debt at all-time highs. We see interest rates near all-time lows. So if you just play the tape out 5 years, or if you play the tape out 10 years, this thing is a disaster.
Right.
Because you have all of these high loans, high debt loads that will have to be serviced. And they're not going away just because rates go up. They're going to also go up as well. So we're faced with some really big challenges here financially. And I think the stock market, as we move into this final quarter of 2016, has me alarmed. I've been tightening up my stops on my own stocks. We did trade gold. We called an uptrend in gold. We do trend research here at followthemoney.com, and people can subscribe or become members and then get uptrend alerts.
Mm-hmm.
And so every week we scan the markets. We're looking mainly for commodities, currencies, global markets that are forming new uptrends. I like to find markets and new uptrends. And so every time we find one, we alert our folks. And every time we see a downtrend, we alert our folks. So we told our folks in February that gold and silver were finally forming a new uptrend after a long time. And boy, that sure did work out well. We've done really well. But we just issued a new downtrend alert last weekend for gold. And so we are locking in some of those gains and waiting for the next leg up. We think there'll be one. Well, we think there will be one. But again, I would say my main concerns right now are the human toll that's going on in the Middle East, the seeming lack of empathy by a watching world who views the Middle East like a video game, as if we just need to go drop more bombs on it and that'll fix it. It's just a total disaster, and our financial state is a wreck.
Right.
So
Right.
those are my concerns.
Interesting. So let's touch on the first topic of the Russia Syria and the human toll and lives being lost there. Now I'm assuming you watched the debate, this past debate, and how I noticed the war drums being starting to be rattled a little bit as far as one of the questions that was posed to Hillary Clinton. And so it seems like the mainstream media is beginning to now paint Russia as they're trying to rig our elections, quote unquote. They're involved in killing innocent lives in Aleppo. And so just this mainstream spiel being given to the American public is in preparation, it looks like, for some type of eventual confrontation with Russia. So do you see between now and, say, the election, any type of chance of the American side of things trying to initiate and try to, instigate things even more than what is really going on?
Mm-hmm. I think it's possible. One thing that's been very bizarre has been the constant push of Russia in the mainstream press, as you've been saying, ever since this election cycle began.
Mm-hmm.
So there are concerns. I mean, it all depends where you fall, and I'm not a political hack. I don't have a dog in the fight, so I don't really care. But when I look at Trump, I see a man who obviously loves money, has been willing to do anything, Lord knows what he would do for money. I mean, that's very clear. He loves and worships money.
Yeah.
So, I mean, no one debates that. Well, when you think about that, that kind of person, and you put him in the most powerful seat in the world, that's a bad combination. And so you have guys like Putin who do want to infiltrate the United States. And have already been doing so through hacking attacks and whatever. And so you can see Trump as that weak link. I think that's one theory that you could say, well, there is a possibility that Trump is a tool. The other idea here is that Russia may be willing to provoke something ahead of time before the election, so as to ensure Trump's election. I think there are two things that would really cause the American people to rally around Trump post all of this debacle that he's been through. Mm-hmm. You still have the evangelicals who are clinging to Trump despite all of the negative talk, which is just a circus in and of itself. The fact that they're continuing to cling to him, it's just a bizarre thing. But the second thing that is unusual is the fact that we can actually expect, we actually believe that it's very possible that some sort of aggression might occur ahead of time, because there's two things that Trump, I think, would benefit from. A domestic terror attack. I think if there were a domestic terror attack and there was a lot of panic about more, I think people look at Trump as the strong man, and they would trust him more to take care of it and to eradicate it. I think they would feel more comfortable with a President Trump in that situation. The other issue that I think would benefit Trump is, there's actually a couple. There's actually three. The second one would be some sort of war. So if Russia and the U.S. began some sort of incursion, I think that Trump comes across as, again, a more of believable war president. And I think people might rally around him because, again, he exudes this strength,
Right.
and people have some confidence in him, regardless of his past and regardless of the things that he said. And then thirdly, I think the other thing that would really help Trump, and this might be the most likely, is the beginning of a crash in the stock market. You know, another 2011 moment where we have this pullback and it looks like it's going to be the real thing. Maybe it doesn't. I think that kind of scary moment could cause people, could cause the American electorate to re-examine Trump and say, you know, the guy does no business, and maybe we need him because Hillary certainly can't fix this problem. So I think there's a few scenarios where Trump can really win, and I think that if there is some sort of alliance between Russia and Trump, you know, that's a total guess, but if there is, then I think that, you know, Russia could help prompt some of those things. They could help prompt a crash. They could help prompt some sort of terrorist attack or whatever. You know, I mean, those are all kinds of assumptions, and of course, I'm getting way off of the reservation here with some of these things, but I'm merely speculating.
Right.
So those are some of my thoughts there. But when it comes to Donald Trump and Russia in particular, we've seen so many of these WikiLeaks that have come out that have shown Clinton has had her hands in the cookie jar as well. And we also see from the WikiLeaks that we have now proof out of Hillary Clinton's own handwriting or through her own email that Saudi Arabia and Qatar are providing financial and logistical support to the Islamic State, to ISIS. That is, Saudi Arabia is, in many ways, the source of ISIS. And so this really complicates a lot of things in the Middle East, and it really explains why I think the United States needs to get the heck out of the Middle East and really reassess our values and goals.
Right, understandable. Now, I really don't foresee a time where, you know, we actually called home the troops, just because it seems like with everything happening around the de-dollarization globally, of people just basically coming up with alternatives. You know, we have everything happening out with the BRIC nations, the AIB, so all those things are forming outside of the dollar system. I don't really foresee the, you know, troops coming home, because I guess they have to support and enforce and show that we are still the quote unquote strongest nation on the planet. So I wish that was the case, but I foresee something happening that will be very unpleasant to us here, as well as continue, you know, bombing other places. Now, you mentioned also the economy here. Like, a lot of data have come out over the last couple of weeks about, you know, just recession type talk. What are your thoughts? Do you think we are in or approaching, or a recession is not too far around the corner? You know, what's your thoughts on that?
Well, it's a mixed picture because when you look at the earnings picture for Q4, there's mixed signals. I mean, some estimates that I see show that we're going to have a banner fourth quarter for stock earnings here in the United States, but then other pictures don't paint the same rosy picture. So I'm a little concerned about the chart mainly. Whenever I'm a chart reader, I'm a technical guy, and so when I look at the charts, when I look at the S&P 500 chart, I see a scary looking chart. I see a chart that looks like it needs to go down. And when I say scary, I don't mean that it's going to go to zero. I mean that it's really going to pull back sharply. I can see that happening in Q4. You know, what we're also seeing right now too is an increase in the dollar. The dollar has been rising mainly due to the fact that it has been the beneficiary of so much turmoil today. So you have, you know, for example, the British pound, which has fallen below the key 130 support level. We're seeing the British pound at levels we haven't seen since 1985. The euro also forming a new downtrend as of late. So there's a lot of of course the yuan has also been weak. And so this has really helped the dollar, and this has put pressure on gold and silver. So it kind of blurs the picture as to what's really happening. But if the dollar continues to strengthen, not only will it put pressure on gold and silver continually, but it'll also put pressure on earnings. It'll put pressure on future earnings. It'll put pressure on stocks. I think that the main concern that I have is that people are not going to be prepared. They're not lightening up. Many people are heavily in the stock market. Some are, and they believe this recovery story. They believe that the Fed has things under control. They believe that we're going to slowly start raising interest rates. and that things will go smoothly. And I just don't have that opinion. I think we're going to see a lot more turmoil on the horizon.
Right, you mentioned interest rates, and since our last conversation, there's been a little smidget of a hike. Do you foresee, rates normalizing, or there being another incremental increase, next couple months, next year, December? Apparently, the statistics are high for a rate hike in December again. So, what are your thoughts on that? Can they actually begin to really get those rates up there back to normal heights, or no?
Well, the concern, I think, with interest rates is that central banks are the ones who are supposed to move interest rates. And I think that when you look back in the past, there's a lot of great books people can read on central banking. I'm thinking of one now called The Lords of Finance, I believe is the title. But there's so many good books you can read. But when you read the history of central banking, you will discover that when interest rates begin to take off without the central bank's endorsement, things go really bad. And I think what many people don't understand about the Fed is that the Fed doesn't move interest rates. It moves interest rate targets. And so what they do is they say, we want interest rates to be here, and therefore interest rates move to that level. So and so they through their words, they're able to manipulate interest rates and move them. So they move the target.
Mhm.
And by so doing, it moves the interest rate. And so what's concerning is that how long can the interest rates remain suppressed this long? And if the Fed tries to continue low interest rates or just minimal little hikes here and there whenever they see fit, what happens whenever the yields really begin to get out of control and they go past the target? See, whenever the rates go past the stated target of the central bank, that's whenever people find out the emperor has no clothes. They discover, oh, no kidding. They don't really control the rates, they just pretend to. And so I think that my concern on that would be if you saw rates begin to elevate due to the global debacle and not due to the Fed's words, because the minute that that is seen for what it is, then you're going to have some panic. So I think the Fed is going to be real wise about this. They're watching those rates. I remember it was just about 2 weeks ago, 3 weeks ago. I look at about 500 charts a day. I'm a trader, and so I'm just always looking at charts. And I started seeing all of these new buy signals forming. And I said, what is this? And I went in and I was looking at a certain set of charts, and they were all yields. All of these yields in the United States were all beginning to form. So in other words, if you wanted to invest in the yield, then of course, that now would be the time to do it. So we're starting to see these rising yields all setting off, and we're wondering how long will they continue up, and when will they stop? Will they stop before the Fed, before they reach the ceiling of the Fed? These are all the kinds of questions I think that worry central bankers. They're what worry me. I think that the attempt to suppress interest rates has been like holding a beach ball underneath the pool, underneath the water. Eventually, it's just going to come up, and when it does, it's going to splash and make everybody wet.
Wow, yeah, it's going to be dangerous, dangerous. Now let's turn to Europe a little bit. Deutsche Bank. Deutsche Bank is mainstream news nowadays. Will they be bailed in, or will they have to bail out? So, what are your thoughts on Deutsche Bank, and will that kind of be like the catalyst for things going global as far as the banking sector is concerned, or what's what?
That's a tough question. I mean, Deutsche Bank, again, the largest bank in Germany. Also, they have a tremendous amount of derivatives. Their derivative portfolio is among the highest, at least on a notional level, their notional value. And when we think about Deutsche Bank, we think about Lehman. We think about another bank that just goes down in flames, causing everything else to get attention. Lehman turned the spotlight on the banking industry in the United States, and it was a bad picture. And so right now, banking is in really bad shape. Those who are watching the financial sector, I mean, they know European banks are a disaster still. United States banks are not that great. I mean, we constantly hear how they're much better than Europe. They're not much better. And if you go over to Asia, I mean, the banking sector is in trouble because we are completely dependent upon usury and interest. And now that interest level is so low that these banks are having a hard time operating in this area. They're going to do fine. They're going to do much better when interest rates are higher, right? When that spread is bigger. And of course, those who survive this onslaught. But I think that Deutsche Bank is is just a big X factor. I can't quite get my arms around whether it's really the Lehman moment or if it's just a kind of a diversion from what really is going on. Deutsche Bank, no doubt, though, is in trouble, as is Wells Fargo here in the United States. I mean, Wells Fargo has been able to hold off and stave off some of the negativity as they're still churning out profits. But Wells Fargo has been shown to be a scam, and I think that it's going to catch up with that bank. So I think there's some great opportunities to short banks here in this fourth quarter. I think that Deutsche Bank may have already had its big moment for shorting, but I think there are others that many people could play and make a lot of money.
Right. Now, as we draw towards the end of our conversation today, you do a good job of educating people. You have a nice, strong community over FTM Daily. What are some suggestions or some things that you would like to leave the audience with on how to, tighten things up here or there, and how to prepare perhaps for the end of this year and going into 2017 with mass amount of uncertainty we face? What are some things that you would maybe want to share with those on how to tighten up a little bit?
Hmm. Well, I read just the other day that 7 out of 10 Americans don't have more than 7 out of 10 Americans have less than $1,000 in savings. You get these
Hmm.
stats pretty occasionally. You see these, and they just constantly remind you of the state that we're in. I think that people need to be doing what we've always said from the very beginning in our book. That is, absolutely positively, you must diversify your income. You must diversify your income. Most people are dependent upon one job, one employer, one boss. They have one company that gives them a paycheck, and that covers all of their expenses. I mean, it takes care of their car payment, their house payment, their kids' education. One company. And I think this is a very dangerous way to live in the 21st century. I think people need to realize that they are commodities in these corporations. They're not, they need to realize that they are a free agent, really. And so we teach people the need to have multiple streams of income. We have at our website, we have an income university. And in the book, Bankruptcy of Our Nation, we talk about the 21, 22 different income streams that people can create both now and in retirement. I think it's important for people to develop multiple streams of income. That those are there are some that are easy to build. There are some that are difficult to build. If you have money, you can obviously create more money within. You can make more income. If you only have time but no money, you can also make money. So I think people need to be thinking about those things. I think they also need to be realizing that they do need to have emergency savings. Cash is king at the crash every single time. And so if you have some money saved aside, and I recommend 6 months of your gross income. So if you make $3,000 a month before taxes, then you should have $18,000, which is 3 times 6 months, in uh, in savings, and that can be diversified. We diversify ours using the U.S. dollar, gold and silver, and foreign currencies, stable foreign currencies. So we have our diversified savings, and then when it comes to our investments, we do the same thing. We're very diversified across various asset classes. So I think the main key for people is to find a motivation. Uh, if you've ever met somebody who has had a heart attack, you'll discover that they understand the value of exercise. Uh, but oftentimes beforehand they don't. And so I think this is what American people who don't have a lot of savings, they need to realize that it's better to save before that heart attack, right? It's better to exercise before the heart attack than have to do it afterwards. Let's start saving now. Let's start diversifying our savings now. Let's start diversifying our income now, because things are not going to get any better here in the United States economically, in my opinion.
Right. Well, Jay Robinson, thank you for sitting down with us. Can you tell the audience how to get involved, how to subscribe, and how to stay in tune with what you have going on?
Absolutely. We put out a weekly publication every week to all of our subscribers known as the Weekend Briefing. It contains all of our uptrend alerts, all of our downtrend alerts. It contains some great investment insights. We've been publishing that for some time. And then we also have a lot of other things. We mentioned the Income University at our website. So I would just encourage people to go to our website. They can just go to followthemoney.com. It takes them right there. And then they'll be on the front page. They can see the plans and pricing button. They can go there and pick out a plan that works for them. And all of our services come with a 100% money back guarantee. We absolutely, as you mentioned, are dedicated towards education. So there's going to be a lot of education with some actionable insights along the way. So I think people who are looking to improve their understanding of this time, understand where they are, and also learn what to do about it, we can help. Followthemoney.com. We'd love to see you.
Well, Jerry, thanks for sitting down. Look forward to staying in touch with you, and definitely keep an eye on what you have going on. And I'll definitely subscribe and get alerted to uptrends and downtrends. So appreciate you for sitting down with us again.
Mike, keep up the good work, and thanks for the opportunity.
I will. Thank you.
Well, this concludes today's discussion with Jerry Robinson from FollowTheMoneyDaily.com. Hope you found our conversation to be informative as well as educational. Scroll down below, leave us a comment. I would love to hear your thoughts on this interview. As well as if you're new to RTD, click the subscribe button for more RTD news interviews as well as monetary news updates. Look forward to bringing you more interviews. Until next time.